Tesla stock is ripping at the time of recording this video, up about 5.5%. And here's why. And there's actually multiple different pieces of news today that are coming together to really show Tesla's demand is insane. First and foremost, Tesla's China insured units for last week came in at 21,000. This is one of the best weeks you've ever seen in China. Literally ever. This brings your running year-to-date total to 137,200, which is about 4,000 higher than your year-to-date total from 2024, where you had 133,200. So, demand problem? I don't see it. As Sawyer Merritt points out, there's literally only 3 other times in Tesla China history where more Teslas were registered in a single week, with the highest ever being 23,100 in 2022. Not only has the new Model Y production ramp at Giga Shanghai done extremely well, but demand is very high in China. Donald Trump last night also said that Elon Musk's special government employee tenure is coming to an end in about a month. He says, quote, "I think he's amazing, but I also think he's got a big company to run. So at some point he's going to have to be going back. He wants to. I'd keep him as long as I can keep him. I love very smart people." But just to be clear, Elon will still be running DOGE after the current special government employee tenure period. In 1962, Congress created the role of, quote, special government employee, which allows the executive branch, the legislative branch, and independent federal agencies to bring on employees for specific roles on a temporary basis. SGEs are limited to working for the government for no more than 130 days out of 365-day periods, though they can work multiple years, and they can either be paid or unpaid. So there is some hope, if you will, that Elon is going to be stepping back from DOGE and stepping more into an active role at Tesla again, and that is part of what I would say is boosting Tesla stock today. Also, Forbes wrote this article from the contributor Brooke Crothers that's titled "Unfazed by Protest. Customers Line Up for the New Model Y." Quote, "At peak consumer hours or customer hours, I estimated that there were more customers than protesters at the Tesla store. Customers seemed unfazed by the protest. I was in one of those lines waiting to test drive the new Model Y, but after an hour and a half, I gave up. In fact, Saturday was the busiest I have seen a Tesla store in Los Angeles this year. That includes visits to locations in Canoga Park and Century City." So not only is it obvious that there's good demand in China, from what we're hearing, there's good demand pretty much everywhere for Tesla. And I think with delivery numbers being tomorrow, people are like, hey, maybe we were too scared of this whole political drama with Elon. Maybe it's not as big of an impact to Tesla as we thought. Elon Musk also says that, quote, "unsupervised FSD Teslas will be carrying passengers in Austin in June and many cities in America by the end of the year." This is something we have talked about for now years on the channel. What really gives Tesla the advantage over something like a Waymo is the scalability. Essentially, why is Tesla launching in Austin, Texas before other cities? Well, regulation. They're permitting Tesla to do so. But Tesla could go launch in any other city, right? Reasonably speaking. It's once you knock down the regulation barriers, the scalability of FSD will be very fast, right? Or, unsupervised FSD like robotaxis. It really just depends on the city if they want to let that be in the city or not. Whereas Waymo has to spend months and months and months actually, mapping the cities. Tesla doesn't need to do that. And that is Tesla's massive advantage over Waymo. And of course, Elon Musk confirming that we could have robotaxis in many, quote, many cities in America by the end of this year is something that I don't think a lot of people have actually been expecting. And last night, Tesla China announced that it will offer 3 years interest-free loans for the refreshed Model Y until April 30th. Wes, he is the Cybertruck lead engineer for the Cybertruck, posted this video from his Sentry mode that shows a car that pulled up next to him. They rolled down the passenger backseat window, and he actually told him that his daughter loves Cybertrucks and points them out every time they see them. Sawyer Merritt also did a poll here on X asking how many cars Tesla has delivered in Q1. That delivery number again comes out tomorrow. And it's kind of everywhere. 19.4% of voters, about 10,000 voters as of now, believe the number will be over 370,000. 11.8% believe between 360 and 370,000. 31.4% believe between 350,000 and 360,000. And like myself, 37.3% expect under 350,000 deliveries. But here's the kicker. It doesn't matter. It doesn't matter what the delivery number is. And I know some people are going to get really mad at that, but it's all about forward guidance. A company doesn't, skyrocket or crash on earnings if they, do good or bad on the current quarter. It's about guidance. We all know that. So does Tesla give us guidance that, delivery numbers were low in Q1 because of a shutdown of factories and running down inventory and scaling the new Model Y? Or does Tesla say nothing? Just gives us a number and no statement, no explanation, no nothing. That's the big question. And I think Tesla will explain why Q1 was low on deliveries. And I mean, you're probably going to get a, some kind of forward-looking guidance that says, hey, factories are scaled, they're continuing to scale, and Q2 is going to look better than Q1. That's all you need to send Tesla stock skyrocketing coming tomorrow. But we'll talk about that a little bit more in the next video. U.S. Attorney General Pam Bondi has announced that the Department of Justice has brought forth charges against another alleged Tesla firebomber. We are seeking 20 years in prison. Let this be a warning. You can run, but you cannot hide. Justice is coming. And a Texas senator named Joanne Huffman has introduced an amended state bill to classify damaging or disrupting EV charging stations as a third-degree felony, punishable by 2 to 10 years in prison and a fine up to $10,000. Option activity today for Tesla stock, believe it or not, from hedge funds and institutions, is relatively slow. You only have 71 different trades totaling $34.2 million with a positive order value of 32%. So that's a low positive order value, but it's a low dollar amount as well. So you don't see that too often. I'll just say that. It looks like today you have about 280,000 shares as well that are being sold short. But again, not a whole lot of activity in both options and what short sellers are doing with short positions. Tesla's global inventory numbers are popping up a little bit. The Model Y went from about 1,300 vehicles in total global inventories now to almost 1,500. It's a baby pop in the grand scope of, where we were at about 18,000 in inventory down to all the way like 1,200, right? This was the lowest inventory you've ever seen for the Model Y before, and really all Tesla products were sitting at very low inventory numbers. The ramping process for the new Model Y has definitely slowed things down, and I think it was probably more difficult ramping than Tesla expected, if we're just being honest here. But I think we are starting to get back into the flow of things, and I do think that's why Q2 is going to look a lot better than Q1. Nonetheless, the Model X has inventory of about 2,500. Same is true with the Cybertruck at about 2,500 as well. The Model S at 1,200 and the Model 3 popping up a bit today to about 4,000. But overall, very low levels of inventory. That suggests good demand. And again, I will point out, like, if you are ever personally like concerned about Tesla's demand, just look at what they're doing with pricing. If Tesla is cutting prices, then demand is probably under some pressure. If Tesla's not cutting prices, it's safe to say demand is probably just fine. And Tesla continues to run about 2,000 different ads on Google. Now, we did have some economic data today as well with ISM manufacturing PMIs. They came in at 49 versus estimates of 49.5. So came in a little bit weaker than expected. ISM manufacturing employment came in at 44.7, well off the estimate of 47.5. Construction spending month over month came in positive 0.7% versus estimates of 0.3%. So that beat. ISM manufacturing new orders came in at 45.2 versus estimates of 48.5. And prices in the manufacturing sector came in at 69.4 versus estimates of 65. So prices up, employment down, new orders down. That does kind of look stagflationary, although markets don't really care too much about the manufacturing PMIs. They've been bad for a really long time. So again, it's not a big shocker when they're bad, or really markets don't care because manufacturing is like 20% of the economy. So it's just not a big enough chunk of the economy to really make a big difference for inflation or for, GDP. Now, JOLTS job openings came in lower than expected. Last month, you were at 7.762 million. We were expecting 7.63 million. You came in at 7.568 million. So you came in a fair bit below expectations, okay? It's not the end of the world. It's not too bad, but it's not a great sign for the labor market either. Now, the big data this week, even forget the reciprocal tariffs coming tomorrow. The big data is your jobs report. It is your unemployment rate. It is the speech from Fed Jerome Powell on Friday. We'll talk about this a little bit more in the next video, but that's what is really going to be the big driver of at least the end of this week. So anything can happen between now and Friday, even if markets rally or sell off into Friday. It doesn't really matter because Friday is going to give you the biggest move. Now, JOLTS job quits came in a little bit lower than expected at 3.195 million versus estimates of 3.2 million. And the RCM TIPP Economic Optimism Index came in at 49.1 versus estimates of 50.1. Dallas Fed Services Index came in at negative 11.3. The estimate was positive 5, so that was really bad. Dallas Fed Services Revenues Index came in at 1.3 versus estimates of 7. So that was also really bad. And you can see today, just looking at the broader indexes, the Dow is up 0.1%, S&P is up 0.3%, NASDAQ up 0.72%, Russell 2000 up 1/3%, the VIX is down 1.5% today to 21.94, and bonds are down a lot as well. 10-year Treasury yields are down almost 9 basis points to now the lowest level you have been at since the election, coming in at 4.15%. So this seems partly due to some of the tariffs that could be coming out tomorrow. And there's, some reports suggesting a roughly 20% tariff on most imports. I think Wall Street's saying that's going to be bad for the economy, that it's going to be worse for economic growth than it is, an upside pressure for inflation. And I think people are going out and buying the bonds for that. But I also think you just ended Q1 yesterday. Now you've started Q2. And I think people are saying bonds offer a really good risk reward here for Q2, especially if the economy weakens. So as people kind of reshuffled their portfolios yesterday, I think they're saying Q2 bonds are a pretty good bet in this market. And I think that's partly why bond yields, 10-year Treasury yields, are down almost 9 basis points today. That's a huge drop on, data that mainly came in line with expectations. So it's not about the data. It's about what Wall Street is seeing for Q2, which lower bond yields, lower economic growth, that's not exactly great for stocks. So it's a little bit of a red flag, in my opinion. Mexico's President Sheinbaum says the response to U.S. tariffs will come on April 3rd. So they're planning reciprocal tariffs. And the head of the EU here says many Europeans feel disheartened by the new U.S. tariffs. Europe didn't start this, but we have what we need: the biggest single market, the leverage to negotiate, the means to strike back. We'll defend our interests. She concludes this speech by saying, let's be clear, we didn't start this. If needed, we have a strong retaliation plan and we will use it. And this headline here says the EU is considering targeting big US tech firms with regulations in response to Trump's tariffs. Canada's Prime Minister Carney says we are going to be very deliberate in terms of the measures we take to fight for Canada. And Carney says that Canada will retaliate with tariffs if the US applies tariffs on Wednesday. And Canada's Prime Minister Carney says Trade Minister LeBlanc is having regular talks with US Commerce Secretary Lutnick. And Donald Trump will be delivering remarks in the Rose Garden at 4 p.m. on Wednesday. So it looks like the tariffs are going to come after the bell tomorrow, like after the markets close tomorrow. So that'll get interesting. The Mexican President Sheinbaum says there are more lists of names of alleged drug traffickers for extradition to the U.S. Mexico is willing to cooperate. The CNN Fear and Greed Index today is at 19. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand in extreme fear. And junk bond demand also in fear. The percent of stocks trading above their 50-day moving average sitting at about 25% today, actually positive, up 0.22%. So that's good, but there's, again, this is not a great indication of what's coming next for markets anymore. I mean, we've been in a weak place really since September, October of 2024, and it just hasn't gotten any better. What will be interesting coming out on Thursday is a new AI investor sentiment survey. We did see bullish investors jump from 2 weeks ago, but markets hit a new low of this correction yesterday. Do you see those bullish investors dial back a bit and fall lower again, or does it remain relatively stable? And what that'll do is kind of reset some of your sentiment metrics, where it'll kind of show people are getting now used to lower levels, and people can get bullish at lower levels. That obviously can set you up for further downside as people turn from bullish again to bearish. A lot of the argument that some of your bulls have made out there is sentiment is so negative. And sure, you see that in some sentiment surveys like this AAII investor sentiment survey, but you don't see that in the VIX. You don't really see that in price action in the markets. People are not that bearish out there. Like XLP, I know, consumer staples, that's kind of a recession trade in and of itself, but it's still near all-time highs. Any recession we've ever went into, XLP has also gotten completely destroyed, right? 08, 09, COVID, doesn't matter. Like during an actual recession, consumer staples will also get wrecked. Tech will get wrecked. Everything. Normally, you don't see a bid to consumer staples even during a recession. Or going into one, you can a little bit as somewhat a, defensive trade, but it's not a sign of mass fear out there. And you can see yesterday you bounced right at about that 300-day moving average. That's a big level for me personally. I want to be watching heading into tomorrow and really throughout the rest of this week, because again, tomorrow anything can happen. Markets could rip higher, but the big catalyst is Friday. Don't forget that. Big catalyst is the jobs report, the speech from Fed Jerome Powell. That could undo any rally that we see over the next 2 days. Okay, so I really want to see, do we close this week below or above the 300-day moving average? A close below obviously is not good for the bulls, right? Not good for overall markets. A close above that could be a solid sign. So watch out for that 300-day moving average. and that's sitting at about $549 on the SPY. But let me know what you guys think about all of this down below in the comments section. Hit the like button as well as subscribe to the channel if you have not done so already. Enjoy the rest of your day, and I will see you in the next one.